All right, and we are live. Welcome, DoorGrow hackers, to the DoorGrow Show. If you are a property management entrepreneur that wants to add doors, make a difference, increase revenue, help others, impact lives, and you are interested in growing your business and life, and you are open to doing things a bit differently, then you are a DoorGrow hacker. DoorGrow hackers love the opportunities, daily variety, unique challenges, and freedom that property management brings. Many in real estate think you're crazy for doing it. You think they're crazy for not, because you realize that property management is the ultimate high trust gateway to real estate deals, relationships, and residual income. At DoorGrow, we are on a mission to transform property management businesses and their owners. We want to transform the industry, eliminate the BS, build awareness, change the perception, expand the market, and help the best property management entrepreneurs win. I'm your host, property management growth expert Jason Hull, the founder of Open Potion Gather Kudos, Thunder Local, and of course, DoorGrow. Now let's get into the show. And today's guest is returning to the show, the DoorGrow Show, and it is Brad Larsen. Brad, welcome to the show.
Thanks for having me on, Jason. That was a mouthful you just put out, so you might have to take a knee and drink some water after that one.
I'm quite the talker. So, Brad, really excited to have you back on the show. I'm going to introduce you. So, Brad, the last time you came on our show, shortly after that, you launched your own podcast, which is awesome, the Property Management Mastermind Show. So if you guys haven't heard that yet, make sure you check that out. One of the things that I like about what Brad brings to the industry is he is tactical. He gets into nuts and bolts. He is real world. He is raw, and he showcases like behind the scenes how he actually is running his company. And you don't pull any punches. Like you,
I try not to. I like to be very honest and sometimes blunt, and sometimes it pays off, sometimes it doesn't.
I love it because, as my wife sometimes says, I'm just an asshole. And I love putting out there like what really works and the real message that people need to hear. So I like that. I'm a lot more big picture of a thinker, and I'm looking at the whole industry as a whole. And I love this different perspective you bring to the table that really showcases like what is going on in the nitty gritty details. And so I love that. So I'm excited to have you on the show. You also have your own property management business, RentWorks, with an X, WERX, which you guys can check out Brad's company. I think he's somebody to keep an eye on. He does creative and innovative things with his own business, which I enjoy watching. And today we're going to be talking about something that's innovative, something the industry needs, something new. And this is the NARPM Standard of Accounting. And this is something pioneered largely by you, correct, Brad?
Right. So we kind of recognized this need a long time ago, and it all boils back to a conference in 2014 where Tony Dross was a prior NARPM president, and he tried to do a compilation of different management companies' numbers, and it turned as good as he could make it. He did a great job. And it also shed light on the fact that everyone is speaking different languages. Like literally everyone is speaking different things and nobody can get on the same page. And so when we were rookies and wanted to start our own chart of accounts for our own management company, we had to take his presentation, take it to a virtual assistant, and create our own GL code, our own chart of accounts. We had to create it. Okay, there was nothing that we could just go out there and assume or copy or adopt. We had to create our own off of that one presentation that they put out, taking the hit list and the best and the all-stars from other companies. So I'm really glad you gave me this forum to talk about the NARPM standard, because this is going to be potentially industry changing for a lot of different folks. And so let's go into some of this, if I may. And I'm going to be doing a lot of talking, and please bounce some questions off me as we go.
Yeah, absolutely. Ready? So let's start with why. Like, why does this even matter? Because nobody cares about the what or the details or what we want them to do until they first understand, like, why. Why does this matter?
Well, currently right now, there's nothing in the industry that is a set standard of acceptable chart of accounts. There's no definitions, there's no equations, and there's no standardization on metrics. So it's causing property management company owners to essentially create their own, like what we had to, or they have to adopt something from a different industry. So as a national trade organization, we identified this with NARPM, that it's really up to them. It's their duty, with our help, to establish such a standards for our industry. And they've been very receptive of this. So that was the identifying of the why. Now the actual how is the tactical side of it. NARPM, the leadership, as I mentioned, especially the incoming president, I'm drawing up Eric Wetherington. Eric was instrumental in helping us put this in front of the NARPM committee, because it's an organization like any other political organization. You have committees, subcommittees, boards, directors, presidents. Everybody's like, wanting to make decisions. You have a finance committee that actually has to bless off on the money. And so all that was going to be taken into account. But getting back to the why, and so who's going to set the standard and why we had to do this, is a lot of it is, if I want to compare myself to your company or your organizations that you represent, there is no standard language. I'm literally looking at your numbers as your GL codes are 10,000 to 12,000, and mine are 8,000 to 7,000. And they're just backwards. So you can't compare line to line. And that's really dumb, because it's just really easy to take an old chart of accounts, all the information in there, relabel it into a new chart of accounts. Yeah, there's going to be some outliers, but you're going to get 80, 90% going into the funnel that we want it to go into. And so the end of this, what we're looking at doing is we want a standardized chart of accounts, GL codes, names. We want definitions and best practices on how to use that chart of accounts. We want rules on applying those charts. Okay, this is all part of the NARPM standard. We want standardized reconciliation practices. We want common industry metrics to include definitions and formulas. Okay, we want industry studies to be focused around the NARPM accounting standard to produce acceptable and common ranges for company revenue and expenses. Okay, so what all that means, that's really straight off the presentation that we put in front of NARPM. I'm showing up the paper so nobody can see it, but you can see it. That's straight off of what we presented to them. And wholeheartedly, they all said, this is a great thing. We need to adopt this. What do we do next? And to their credit, they allowed the committee to be formed. I'm the chair of this committee, and we had 8 members on this subcommittee, and 2 of them are CPAs. So some pretty high level folks. I don't need to drop names because I'm going to forget somebody and offend somebody.
Right.
So let's just say there's a lot of really good, solid, current professionals in that group that we've been bouncing this off of for several months. So we organized this, put it in front of NARPM as, hey, we want to get this particular thing done. And then we went to a vendor. And so the vendor that we chose was Profit Coach. And Profit Coach is Jordan Muela and Daniel Craig. And they're super sharp, because at a prior conference, they put on a drill. They went out and put 50 companies' books together. And it took them 1,000 man hours to do this for 50 companies is all. Not 500, not 5,000, 50 companies. It took them 1,000 man hours. So clearly it was a nightmare, because you couldn't compare apples to apples. I know that's a used saying that everybody hates, but people could not compare one to the other. So they recognized this. We went to them and said, hey, we have a NARPM accounting standard that we want you to do. And essentially what we're going to be basing it off of is the GAAP. So the GAAP is the general accepted accounting practices or principles, whichever term you want to find in Wikipedia. That's what all the CPAs, all the accountants have to abide by, is the GAAP. So a play on words is we're calling this particular new initiative the NAP, the NARPM accepted accounting practices or principles. And again, you can use those different practices, principles, depending on what definition you want to take. The NAP standard is going to set that standard for the industry. And once this is fully adopted and blessed off of and looked at legal and all the checks are going on, it's going to be adopted. Now, it will not be a perfect solution up front. Everyone's going to have to know that. But it's going to be the point where we can modify it and fix it and make it better year after year after year, to where it just improves itself for forevermore, let's say. So where we are right now, right here it is here it is November of 2018. If I have that right, I've got a lot going on. But we're getting ready to do a presentation with the NARPM board next month, December. That presentation should shore up most of what we've got done with the Profit Coach, putting this all together. Then at that point, NARPM should be ready to adopt this sometime in the first quarter. They're even talking as soon as February to be ready for the broker owner conference. And so that's part of the system to get it adopted. Of course, we're going to have back and forth iterations, and there's going to be some changes, and everyone wants to understand the definitions, and it won't be a perfect solution. Everyone's got to understand that. Okay, everyone's got to understand it's not going to be a 100% solution, because I looked at it initially and I had 5 gripes. already, and that was just me. And
Right.
Profit Coach, to their credit, they listen to us, they listen to the board, they make some tweaks, but I'm only one person. So imagine releasing this to 5,000, they're going to come up with a list of 500 gripes, and, that can be taken into account. So from what I understand with NARPM, they're going to adopt this as a value add for free to the industry. Okay. I hope nobody holds me to that because I don't know for sure, but the last conversation we had is they were going to push it as just part of the membership. Just thank you for being members of NARPM. Here's everything you need to include your chart of accounts, your definitions, your standards, your metrics, everything you need to do a bunch of different things. And so one of the things we didn't really touch on is, we'll get to this. I want to talk about how do the NARPM members benefit. We'll get to that here in a minute. But on the adoption side, once NARPM adopts this, they're looking at doing their training sessions at the broker owner conference, the national conference, state conferences, local conferences. They're going to have their own training initiated with this to be ever more popular, right? It's going to be ever more to where it's not a mandated thing. Okay, people need to understand this. They're not forcing you to adopt these standards. If you want to do stubby pencil and crayons, go ahead. But if you want to compare your business to other businesses in a legitimate format to where we can actually speak the same language, this is what people are going to want to adopt. And it should be released sometime in first quarter of 2019. And it's going to be the first iteration. We'll train on it. We'll take feedback and we'll improve on it. And so
will there be a designation or certification that a company can achieve to showcase that they've adopted these best practices in accounting?
Great question. And we don't quite know yet because we're still working with NARPM on that. That idea of creating a designation, I think, is fabulous. I really do like that, especially on the company level. I think that should be something that we could or would want to implement to show everybody that we have a standardized chart of accounts, a standardized method of accounting, a standardized method of reconciliations. And if anybody understands accounting and how screwed up it is, it would be me. I don't understand accounting. Okay, I'm a horrible accountant, but I'm going through some of the worst stuff right now with my business because we've had a large loss. And it's basically from an embezzlement of a prior employee. Now, I'm not going to get into it in this podcast, but I can just tell you from firsthand experience, had we been on more regimented system.
A lot of businesses, that's common.
Very common.
That happens, embezzlement. I mean, and oftentimes it's the CFOs or the financial people that are most closely involved. And So
here's the thing on that exact comment, Jason, on that exact comment. Everyone's listening out there right now and they hear the word embezzlement. They all assume, oh, I can trust my person. It's not going to happen to me. No worries whatsoever. I got everything covered.
Right.
That's what everybody says, and I would love to choke them right now. Just say, wake up, and here it's gonna happen to you. People are going to somehow at some point steal from you as a business owner, because once you start to get large and those seven figures start to grow in your business from 500,000 to $1 million in revenue to a couple million in revenue, and you keep going up, those big giant numbers start to really attract people as ways that they can get away with things. And as you grow and scale, the owner can't keep an eye and micromanage everything. So you just have to make the assumption that you're going to be stolen from. But
and the car you don't see is the one that hits you.
Right. And getting back to the NARPM standard here. So very excited about this. And I'm going to give you some examples of how we can best use this. So for example, if you and I were talking to define vacancy, right? This could be a knockdown, throwdown fight just to define vacancy. What is a vacancy? Okay. Do you understand there's probably 5 or 6 definitions for vacancy that I can come up with right now? And all of them could be different depending on the company.
Give like 2 examples, like just for the listeners so they get this.
Does vacancy mean only when rent is being collected? Okay. That's one of them. Vacancy could mean when there's no tenant or owner occupying the home. Vacancy could mean anytime between the tenants, right? That could be a vacancy, but it's not vacant. It's under a lease agreement, even if they overlap. You understand?
Right.
So people, when we start talking about one word like vacancy, they could have 3 or 4 definitions distinctly meant for their business. That's what this is meant to define. Stuff like that. Another one would be client acquisition cost, right? That's another favorite. You hear that thrown around a lot. What is the client acquisition cost formula exactly? So if you and I start talking about client acquisition costs, my definition is different because I include my overhead. my pens, my pencils, my toilet paper, my notepads, my office space, etc. Others would only include their leads and their business development personnel.
Ad spend and
that's it.
stuff like that.
That's where there's a big discrepancy there, right? As far as your client acquisition costs. So that's what this profit coach is doing, is they're defining those types of metrics: a client acquisition cost, profit per unit, numbers of home managed. There's all these different definitions that they're coming up with and putting it on paper. So once we start to apply these definitions, when you and I have a conversation at a bar someday at a NARPM event or one of your conferences, and you can say, "Hey, Brad, what's your client acquisition cost?" Well, according to the NARPM Standard of Accounting, my client acquisition cost is $605. And you would say, "Wow, that's really good. Okay, great. Mine is $405." And we're calculating it exactly the same. Okay, you understand that part. Example three, another good one. Okay, on the chart of accounts versus everything else is a leasing fee versus a leasing commission. In your head, you're thinking, what's the difference? Is there a difference? There probably is to somebody who's been using the term leasing fee to an owner versus leasing commission to a tenant or a tenant's agent. You understand? So we're trying to define those now, and it's been very difficult, but I think we've got a very good handle on it. All right. Those are just a couple of the deep down reasons why we're doing this, because we want the standardized general list of accounts, of course, and we want to be able to define those terms that mean something to us. You've been at NARPM events, and you talk to people that say they have 10,000 billion doors. And okay, what's your profit? Well, my profit is
making this. Like $400 a year a door, or something.
And it just doesn't make a lot of sense. So they've gone down to that granular side and given you the capability of telling you, okay, you can include maintenance or not include maintenance. You can include sales or not include sales. So that's a different term. So what's your profit per unit, excluding maintenance, excluding sales? Jason, what's your profit per unit? What's your PPU? Which is really the bottom line in my head is your profit per unit. Oh, well, my profit per unit is only, $5 a door per month, but we make all this in commissions and we make all this in maintenance. There's a lot of folks that justify not making a lot of money on the management side because they're making a lot of money on the other ancillary businesses, which I think is great. I'm not knocking that. But it's nice to understand that, okay? And that's a big part of it. So common language, adopted industry standards, we can compare metrics. We cannot forget the fact that you can now look at an acquisition in different light. That's a big part of it. So if you're going to go acquire or be acquired, and if you are on the NARPM standard, you're going to be looked at a lot more favorably because you can now compare their numbers to your numbers in very quick fashion. Part of it is once we start getting this really rolling, we get this really rolling, our data set will go from 50 companies like what we had with Profit Coach last year. 50 companies is all they could do. What if we quadruple that, expand it, 500, 1,000, where we can quickly put it into basically an algorithm, a metric, a spreadsheet. Hey, send me your numbers, and it uploads into some sort of automated system. And now all those industry-wide metrics are being compiled, averaged, spun. I mean, all the different deviations you can get inside those metrics. But if you can put it into all one-coded, you love that term, one-coded format, that can be quickly compiled and put into something that we can all use. That's a big part of it too, is sometimes you see some of these studies and they give you these numbers and you're like, what the F am I going to do with that number? I don't know what that means to me. You can tell me the cost of blue pens is $10 billion. And I'm like, great. I don't care about blue pens, right? I don't. But you're telling me what the cost is. Okay, good for you. Great that you compile the information. I don't understand what a blue pen is, so I don't care.
Yeah.
And that's sometimes what you get in some of those studies. All right, so hit me with a question so I can take a breath.
Yeah, absolutely. So, I can tell you're passionate about this, and that's great because if somebody's chairing this and pushing this forward, they should care. And as with any initiative. So this reminds me of something I've heard somebody say about statistics, which is it's lying with numbers. And I think sometimes in a business, we can lie to ourselves with numbers. Like we can say, oh, the amount of money we're making per unit is I'm getting all this maintenance, or I've got this, but they're not focusing on maybe the core product, and are they profitable there or making money there? And so I love the idea of creating this language of communication that allows acquisitions to be easier. Now, how difficult would it be, do you think, if, say, somebody was on this system, they are a NAP standard company, they're looking to acquire another business. How difficult would it be for that business, for them to say, here is the standard we need you to get your books in alignment with so that we can have a conversation about acquiring your company?
That would not be that hard at all.
How difficult would that transition be for them?
That's not going to be that hard at all. You could easily pay a consultancy to come in and do it for $500, $1,000, $1,500, whatever they charge. Right. It's just a little bit of grunt work to take one line to put it in the other. And then any deviations outside of that can be talked through with the business owner. Okay, you have a GL code for blue pens, Mr. Owner, and I know you love that GL code for blue pens. Where do you want that to be combined into? What bucket do you want that to go into? And that can be rolled up into the buckets. And the same goes for anybody who wants to create their own GL codes, because we're giving buckets out, right? The buckets are going to be there. Management fees are going to be in this bucket, maintenance fees in this bucket, et cetera, et cetera, et cetera. And there's going to be plenty of room to create GL code 1005, and that's going to be a blue pen GL code. And I know I use blue pens, but I'm just trying to give you a point. Yeah. Anything you can think of in the deviation side of the GL codes can be added in there, because there's rules for that. Understand this. There's rules for that. Okay. So all the buckets still equate to the same accounting standard across the metric side. So if you meet and comply to that, all of our numbers should match up. It can be broken down in 1,000 different ways. Your management fees at the very top can be broken down 1,000 different ways, right? If you want to break it down to the minuscule, but it still goes to the top line. Well, what's your line 4,000? Well, line 4,000 on our side is X, and it's X for you. That's our talking point, okay? Anything below that, all totals up to the top. So you're still speaking about line 4,000 at the same level. And here's a good saying about statistics. Did you know 87% of statistics are made up?
I've got this brother who has a PhD in finance. He went to Brandeis, and he's I guess an educator now, right? And so what's funny is he realized he's loved numbers. He's a really smart kid, and he realized that in high school that he could just make up a statistic and anything, or a fraction or anything like that, using numbers, and people would just believe it. And he would, just to test people, he would say the most outlandish things, just for kicks. He would go to somebody and say, did you know that impossible numbers? Like he would say 9 out of 7 people brush their teeth with something other than toothpaste, or, it's something really random. And they would go, really? And he's like sitting there going, do you not hear what I just said? Did you not hear that's not even possible, 9 out of 7? But like people were just like they would just abdicate any decision making instantly and say, oh, it must be true. And I think that's a danger that happens inside our business when we feel uncomfortable with numbers, or we feel uncomfortable with the financial side, and somebody we put in control of this because we want to just get rid of it and get it off our plate. It puts us in a dangerous situation. And so connected to all of this, like in my eyes, the way that this is going to be really successful in the long run is there probably does need to be some sort of designation or certification so that people can put that stamp seal on their chest saying, our company has done this, we've got this. And then I think also some sort of certification or stamp or seal of approval that accountants can achieve that want to be affiliated or serve the property management industry as vendors that would be connected to this might make sense. Like they are a NAP certified accountant. I think would be a game changer.
Yeah, to tie into that, one of the initiatives that Profit Coach is working on, and I don't know where they stand on this point, is to get Intuit involved with standardization. And Intuit is QuickBooks. Because one thing I should have explained in the very beginning is this standardization is for all the different softwares you can think of that you want to name to manage your properties inside of X software. And we could probably rattle off 5 of them, and QuickBooks. If you use Sage, it's kind of the same thing, but all those together should talk to each other. So you can use this for the managing of the homes and managing of your business. So they do work well together. That's the design. It's meant for the entire umbrella of your business, not just the homes, not just the profit and loss of your certain accounts. It's meant for the entire thing that you run. And it can be applied to 10 different other businesses. So if you have ancillary businesses like a maintenance company, the same type of ancillary business, you can put that GL codes straight onto your maintenance company. That applies. Management fees won't apply, comma, but a lot of those other things would on a P&L for a maintenance company. So you can easily kind of compare line for line from your maintenance company to your management company, and vice and so on and so forth. I mean, there could be a real estate brokerage in there that you have. Some people can do title companies like y'all there in California. You can do closing of escrows. So there's all kinds of little ancillary businesses that can be added onto that GL code list, and that's going to be really neat to see people compare. I can't stress enough the acquisition side. That is giant. I mean, everybody I've talked to that talks acquisitions, they hear this and their eyes just get huge because they know their life has just potentially become so much easier, because if they can go in and either look at somebody who's already on the NAP standard or put them on the NAP standard, that's going to make them comparing and valuing that company easier and better. So here's what a little side effect is. If you forget everything I said, by going on the NAP standard, the NARPM standard, this will raise the value of your company, because essentially what it's going to do is raise the value of everybody's company that's going to adopt this, because it's going to make their numbers easier to read. It's going to document them better, and it's going to get you a higher multiple. And so when that starts to happen industry-wide, you'll start to see the multiples of management companies increase, and it all starts with the NARPM accounting standard. So I know that's really pie in the sky stuff, but I totally see that happening, and maybe you can too.
Yeah, it makes perfect sense. So related to that, how much of this is controlled by Profit Coach or controlled by NARPM? Because I think some people would have concerns. Here's a for-profit entity, here's a nonprofit entity, and who's really in control of the standard? Who's going to be able to trademark this? And how free and open will this be?
Yeah, very good point. So NARPM has hired Profit Coach. Profit Coach, the vendor, right? Everything that they do will be turned over to NARPM, and it's all NARPM's property. Okay. I think they're going to release it as a value add for free, so it won't be hard to get. But I also think that they're going to continue to engage with Profit Coach on an annual basis to improve, tweak, train, all those different things that you can talk about. They're going to want to be able to come in and do classes. They're going to want to be able to update their NARPM standard. Here's NARPM standard 1.0, the next year's 2.0, and you see where I'm going, to where it's always going to improve every year. I don't think we're just going to be able to set it and forget it. I think it's always going to need to be tweaked and trained on. And that's what we want. Yeah. We don't want to change a lot of the definitions from year to year, but what we do want to do is improve it. And I don't believe, it's not an overly expensive venture to do this. It just, somebody had to sit down and do it. NARPM's got to adopt it, which I believe they will with no problem. They ponied up the money to get it done, so they're going to want to adopt it. And once it starts to get released, people will just naturally want to get into it. And again, I don't think it's going to be that hard to transition your current books into the NARPM accounting standard. You're changing up some GL codes. Yeah, there's a little bit of work. Yeah, there's a little bit of understanding it. But once that's done, all the definitions come out of those formulas. That's the cool part, man. Yeah. So if you really want to ask somebody what a client acquisition cost, for example, going back to that, once you put that into the field that it belongs in, it's all a formula. It just all spits out at the end. You're taking X divided by Y equals something, and that's across the board the same. That's really neat.
I love this. I love this also for NARPM, because this increases the value of having a NARPM membership. It increases the value of being associated with NARPM. It increases the value of having a business that is connected to this by having this. And I believe that helps the whole industry and sets a higher standard for the industry. And I believe, the property management industry doesn't have a great reputation as a whole right now. It's caught in the whole industry as a whole, like I talked about on your show, is kind of caught in the cycle of suck. It's in hell, basically. And I think a rising tide, they say, raises all ships. But I believe in this industry, the tide is so low. There are ships sitting on rocks right now. They're sitting in the sand, and they might have big gaping holes in them. accounting wise, like we're talking about, or customer service wise, or in a lot of areas. And I think a rising tide won't raise every ship. Some ships are going to sink, or they're going to have to patch some freaking holes on their ship. And so I think this is an opportunity. If we can raise the sea level, if we can raise the tide, the best property managers are going to win. It's going to up level the entire industry. It's going to set a higher level of standard. It's going to earn the industry a lot more respect as an industry and as a whole. And I think it's going to squeeze out some of the companies that are not willing to get on board, not willing to do things like this, not willing to shore up the leaks and holes. They're going to sink and they're going to sell off. And who knows, maybe right before they sell, they will go do the get on the NAP standard, and in order to get their business sold for a better multiple.
Yeah, that's totally it. And a couple of things I want to mention real quick about the NARPM release of it is really going to benefit the startups. Some of the old players, they might look at us like they don't need it, they don't want it, they know everything, but the startups coming in will adopt it because that's easy. Dude, here it is. It's in front of you. Just adopt this. How many homes do you have under management? Well, 5. Good. Do it now. It's very easy versus 500 or 5,000 doors. And so you're going to see that in 5 or 6 or 10 years, this will just be, air quote, the way, right? This will be the road. No one's going to question it because everyone's doing it in front of them. It just seems so much common sense. The other part of it I want to talk about is audits, right? So if people can start getting on the same page with their financials, and California is notorious for this, they'll do walk-in audits on you guys. If you have a system to get easily pre-audited by somebody on a yearly basis, because you're on a standardized format, it could make your pre-audit or even your audit that much less painful than as if you just had jumbled stuff every which way.
I mean, if you know that things are on point with your accountant, with your books, with everything, it provides this level of confidence and safety and certainty. And if somebody comes in to audit your business, you feel a lot more comfortable. And you're going to be able to weather that a lot stronger. You're like, hey, we're on point. Like we've got this taken care of. And when somebody goes to purchase a company, they want to see that everything looks healthy and makes sense and is shored up. And so, I see a lot a benefts to this. So
I got a good list of example metrics they're going to be coming up with. You want to read off some of these to get you really fired up?
Yeah, let's bounce them off, and then we can wrap it up by talking about how do people like support you in this or get on board with this.
Sure. So real quick, and then we can wrap it up. Growth metrics: cost per lead, customer acquisition cost with sales, unit churn, customer lifetime value, customer lifetime profit before marketing, customer lifetime profit before sales and marketing, customer lifetime profit before marketing, customer lifetime profit before sales and marketing, time to pay back in months. Love these. Productivity metrics: labor efficiency ratio, direct labor efficiency ratio, management labor efficiency ratio. Revenue metrics: management fees percent of revenue, leasing fees percent of revenue, renewal fees percent of revenue, application fees percent of revenue. Expense metrics: direct labor percent of revenue. It goes on and on. Okay, that's just a couple I wanted to throw out there. That's you might have heard of that and just caught one of those. You're like, I don't know what that is. What is that? And that could be good because then you can learn about it and learn how to compare to other companies in the industry to see where you are. It's not necessarily going to be a good or bad indicator. It's just going to be, hey, I know my client acquisition cost is high and I'm cool with that. Or it's low and I'm cool with that. I get all referrals. At least you know.
I think the key magic in that is contrast. I mean, that's something as business owners we need. And whether we're high or low or how to gauge things, it's hard to even know unless we have at least 2 or 3 examples and we're speaking the same language. And so just being able to create contrast is going to cause a big benefit. So I love that idea. I've noticed that with clients, there were so few calculating their acquisition costs with their lead gen, efforts. And so they were doing all this marketing, cold lead marketing. So I just created this calculator that will help them calculate their acquisition costs, including how much time they were putting into that themselves or their salesperson was contributing into the effort of closing and following up and selling on cold leads. And then we would calculate and have them factor in like what's the hourly wage that they would attribute to themselves or to the BDM or whoever, and put all of that together in one cost. And just them seeing that created so much like transparency or a contrast, that they were able to see that, hey, we're getting the majority of our deals and leads through word of mouth, and we're spending all of our money and time and energy on these cold leads. And it just, like, I had one client come through this that recognized he was spending, I think it was like $1,700 or $1,500 a month on SEO, and he could attribute to getting leads and deals. He was attributing maybe a deal every other month that he could actually link to his website or to that. But he said he was closing 5 or 6 deals a month. And I said, where are those coming from? He said, they're just word of mouth. They just refer. And so I said, so he was spending like, over $3,000 on average for one acquisition, just, based on that, right? To get on a deal. And I said, why are you doing that still, if it's not giving you that return? And he was like, he signed up the next day, right? So sometimes we just don't see things because we're not looking at it. And I think by having all those numbers that you were listing, they can suddenly see things they couldn't see before so much more clearly, and they can start making some healthier decisions. And that would change the entire industry.
Yep. To make good strategic decisions on hiring, firing, making different markets, adding different fees. I mean, all kinds of stuff that can go into it. It's really a great way to kind of keep a track of your business. So to kind of shore this up with you, I'll give you the last word. So if anybody wants to get kind of the updates, I'll be posting them on the Property Management Mastermind Facebook page, so they can join that group along with your group, which I'm sure most of your listeners are already by this point. We got a lot of crosstalk there, so I think it's a good complement to each other on both groups. Mm-hmm. And that's where we'll be posting the updates. And of course, kind of pay attention to NARPM in the next first quarter of 19. You'll see things come across, things being flashed up there. And I expect it to be released here fairly quickly, the second quarter of 19. And man, that's going to be a game changer. I'm so excited to get it done in the industry, get it implemented into our business, and really start to see the positive effects of it.
Awesome. Hey, Brad, this was really interesting. It was fun to converse. This is right in line with our vision to transform the industry. And so I'm excited. Keep us updated and posted. And like Brad said, check out the Property Management Mastermind group on Facebook, and make sure you guys stay abreast as to what's going on with this NAP standard for NARPM.
You got it.
All right. Awesome, Brad. Thanks for coming on.
Yeah,
appreciate you.
Take care, man.
All right, so there you have it. Brad Larsen dropping some knowledge on the future of accounting and property management. And so I would encourage everybody to support that effort. And I think that would be phenomenal for companies to get on the same page. So if you are a new listener, make sure you subscribe to us if you're listening here in iTunes, or if you are watching us live, then we appreciate you watching us, and make sure you are inside our Facebook group, which is the DoorGrow Club. We get between 15,000 to 20,000 interactions in a single month. It really is quite ridiculous, the engagement level that we have in there. And we only allow the property management business owners and entrepreneurs to get into that group. They have to be entrepreneurs in the industry, and we make rare exceptions to that. So make sure you get into that group. You have to apply to get in. And we have our conference coming up. By the time this probably airs on iTunes, it is already gone and done with. But if you are listening, make sure you get your tickets to DoorGrow Live. This is going to be a game changer, a new type of event for the property management industry. We're going to be focusing on entrepreneurism and on growing and scaling businesses, and the future, I believe, of what's going to come in the property management industry, this surge that I believe is about to happen. And we want you to be a part of it. So join us at DoorGrow Live. You can check that out at doorgrowlive.com. And thanks everybody for watching the DoorGrow Show or listening. Bye, everybody.